It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, the smartest guy in the room, Mr. Michael Becker.
Hey, Paul.
Known also as the governor of Texas, the soon-to-be honorary governor of Texas.
That's it, yeah. Greg, watch out, right?
That's right. Michael owns so many units in the state of Texas that we've given him that honorary degree. I don't think he won the election.
No, I'll be on the ballot in a couple of years, maybe. Who knows?
That's good. Michael, as you know, has gone from loaning money at a big, large national bank. You were, number one in the Southwest for your company?
The nation for my business unit 3 years in a row.
Fantastic. Yeah. Has lent billions of dollars in commercial real estate, and now he's gone onto the other side of the platform, and now he is owning real estate. So he went from 16 single-family homes?
Yeah, that's right.
To having just a little bit less than 7,000 apartment units. So he has done a great job, and his team in SPI should be commended. So in the podcast today, we had a question that came in I thought was a good one. What are the biggest barriers to entry, specifically for someone under the age of 25?
You broke. That's usually one of them. You don't have any money, and you don't have any experience, and then people don't take you seriously because of your age. And that's just kind of the way it is. So, but yeah, in all seriousness, all those are your challenges when you're starting on the business. You typically, unless you're more fortunate than me, a lot of people don't come from families with a lot of money. So if you don't have any money, you have to do kind of what I did, which was, get a job, do well at it, try to get promoted, you get in a place you can get some commission if you have that opportunity. Delay gratification, save some capital, form some capital, and then once you have some capital formed, then you can start putting it at risk. So this is not a no money down, no job, no credit type of business. You need to have some actual money to front some pursuit costs. You don't have to have everything, but you have to have something that you can go and get this deal tied up, get some earnest money fronted, pay for some of these lender reports, things like that. So if you don't have it, you need to solve that by partnering with someone that does. So if you're younger and you want to kind of get this done, it's certainly not impossible, but that's certainly a uphill challenge that you have to have. So you need to find someone that can front the earnest money for you, front the pursuit costs, things like that. The other thing is, you tend to be a little bit less experienced. So if you're real serious about it, I would even maybe recommend getting a job working for, as a vendor in the business. That's kind of what I did. I certainly got a wealth of experience being a lender. Just loaning on, deal after deal after deal. So started out in the credit department of a bank for many years, underwriting deals for the kind of the senior loan officers. That's really kind of how I cut my teeth. And all I did was just, work late nights, long hours, take work home, and just work on deal after deal after deal. And you just get lots of pitches you get to see, to use a baseball analogy. And then after a while, you kind of see some patterns and understand the fundamentals of this business, and it really, really helps. So, maybe do something like that would be a good job, or a good job to get as you're creating, kind of forming some capital. And then if you're real young, sometimes it's unfortunate, but people just don't take you as seriously because you're young. The best way to overcome that is to do a deal. So once you kind of get a deal on the scoreboard, everything kind of equalizes a little bit. So if you don't have that and you're really trying to get your first deal done, maybe find a partner with a couple gray hairs that maybe can believe in you and trust in you and come along, that maybe has a little bit of money they can put up at front, and then kind of do that deal together with somebody who has a little bit more experience, a little bit more money. And then that way the perception of their age and experience can maybe kind of offset some of your weaknesses. But those are really kind of the things that I see is just, you need to form some capital, you need to get some experience. Those are some of the things that I kind of see as an uphill battle.
You use Skip and Scott at S2. Tell us a little bit about what you know.
Yeah, that was a good example. I know Scott is probably more successful than I am at this point. He's certainly done more units than we have. And he's, I don't know if he's even 30 yet. And he started out, didn't have any money, broke, and started working as an analyst for a guy who's kind of putting some deals together. And he impressed him so much and earned his way into be a partnership. And now he's kind of taken over the entire company. And they've done, I think, nearly 20,000 units. And he's not even 30. So he certainly saw it at the right time, delayed some gratification, formed some capital, got into a partnership with a more experienced operator, and eventually, through his skill and his drive, he was able to take over the company wholly. And now he's, one of the most successful apartment owners in the entire country.
I mean, that's probably an anomaly, but it's something to kind of shoot for. So we've had Skip Bird on the podcast before, and he is teamed up with Scott Everett at S2 Capital. And just like Michael said, Scott had come in kind of as a junior person, and I'm going to tell you probably at age 21, 22.
Something like that.
I mean, a really young guy. And Scott made his bones and became successful of helping Skip, and they kind of formed the group together that was very successful. It had got a great track record going, was able to raise a bunch of capital, able to buy properties low, fix the properties up, stabilize the properties, sell them at a good price to make a profit. And Skip has kind of gone kind of a different route, and Scott's kind of taken over the business. And Skip's still a partner in the deal, and everything is fine. But it just goes to show you that even the young guys with a lot of effort and a lot of talent can be successful in this business. And as Mike says, I mean, he's been doing it for 8-9 years or so, and maybe he's over age 30. I mean, I would think.
Yeah. So, but the point is, I think most of people's failure in this business can kind of go back to not being self-aware. So everyone has weaknesses in their profile and the weaknesses in their business operations. And so you need to find the ability to have a critical eye of yourself, find out your weaknesses or your deficiencies, and solve for those problems. So being 25 is a weakness because people just don't take you seriously. But, a guy like Scott at this point, a few years ago when he was 25, he had owned, thousands of apartment units and people took him very seriously. But like Paul said, he might be a little bit of an anomaly, but it's very possible. So, the way to equalize a lot of this stuff is to get a deal done. So do whatever you got to do to get that deal done and make it a success, and everything else kind of falls in line.
Well, even talk about your partnership, Michael. I mean, your partner is a fairly young guy too.
Yeah, so when he started our business, he was like 27, 28, and I was an old man at 35.
Yeah. But his skills were different from yours. They were complementary skills, but they were not the same skills.
That's right, yeah. So I think in a partnership, if you two do the same thing well, then one of you is kind of unnecessary, right? So you need to find someone that has different but complementary skill set to what you possess. So if you're kind of the naturally outgoing person, the person that's good talking on their feet, raising capital, talking to brokers, that's certainly a good skill set. Maybe you mirror up with somebody that's a little bit more analytical, kind of likes to live in a spreadsheet, that's kind of have that type of discipline and background, but maybe they're not the best person at being engaging and presenting in front of potential investors or presenting to brokers. So that would certainly be kind of what I would categorize my partnership, and that would be something that I would kind of encourage you guys to do. If you guys are both two peas in a pod and you both like to BS and go be salesy, then but neither of you guys can underwrite, it's probably not the best partnership.
No, I agree. I mean, your partner in there is an SPI. He is a brilliant guy when it comes to Excel and being able to cut and chop the data up and understand the deal and understand the marketplace and check the numbers and goes through it. I mean, that's what he enjoys doing. And so if you're new to the business and you're good finding properties and building the relationships, you may not be good at underwriting these deals. You have a great skill set. Look for a partner, maybe he's a CPA or an engineer or an attorney that's good of doing some of the back office stuff that will complement your skill set. Kind of that's the general theme that I find of successful partnerships in the real estate business. One person's kind of the lead and the other person kind of the person that kind of stays back and understands and kind of works the numbers and making sure that everything works correctly.
Yep. I joke around the office all the time. I don't actually do anything at work all day, so which is not true. But I don't produce work product. I'm there to review and approve stuff. So people ask me questions, and I say yes or no all day. But I don't actually produce work product on a regular basis because that's not what my role for our company is. My role is to kind of serve the leadership function and raise capital and kind of oversee the deals and review other people's work product. That's kind of what I do all day.
If people wanted to get more information about what SPI does and SPI Advisory, what do you guys do? I mean, kind of give me first of all, what do you guys do and what's the best way to get in communication?
Yeah, so the best way to get a hold of us, simply just go to the company's website, which is www.spiadvisory.com. That's SPI like spy. Advisory.com, and there's a contact us form, and you fill our contact us link. You fill the form out. Well, I'm always happy to have a 10 or 15 minute telephone call with listeners of the podcast that are interested in potentially working with us. And kind of really what we do, just raise capital, buy deals. So that's kind of first and foremost. That's really what we focus on. are just kind of securing good quality opportunities with upside, kind of light value add deals, and well located suburban markets. And then we once we get the deals kind of tied up, we'll put them out to investors and raise some capital and kind of serve the ownership function of the group. We do on a few select basis. If you have a little bit of money and you're looking to potentially own your own deal, but you don't have the relationships and you don't certainly have the track record, we've done some advisory services. So meaning that we kind of find the deal, use our track record, leverage that and our relationships to get a high quality deal, and then kind of run the transaction, transaction coordination, place the debt, etc. We really need probably 3 to 4 million minimum in equity to kind of do something like that, Paul. Just because it's not the my biggest cost in life anymore is opportunity cost. So if I spend time on this one thing, I decide expense is something else. So it needs to be something in size. But typically the story of the people we've done the deal with is usually I live in California, I have a 1031, and I need to place it, and I want to be in Texas, but I don't know anybody. Can you help me get that done? And then we've been very successful in doing that, leveraging, like I said, our relationships, our track record, our vendors to get that done. So those are the two primary things we do, with the primary thing being apartment syndicators.
Absolutely agree. Love it. All right, that was Michael Becker. I'm Paul Peebles. Have a great day.